Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. So tonight's webinar is live forex market review. We'll get straight into that. Before we do, if you can read through the disclaimer, everybody. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us. I've given you a link there. So any questions to the chat box or to the question and answer box, please read through the disclaimer. Azu, hello to you. Hope you're well. Hope your dollar Canadian trade's going okay. All right, let's move along. Now, if you're new to the webinars, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. If you want to follow me through the week, go to our website, acy.com, go to the market news tab, or go to our YouTube channel, ACY Securities Australia, or you can connect with me on my Twitter and LinkedIn. I'm putting some content through there through the week as well. Through the week, we have our Telegram channel. If you want to get access to that, get it in contact with Nathan Bray. I'll put his details in the chat now. If you want to get access to my chart lights and templates, the ones I use in my analysis and education webinars for MT4, just contact Nathan. He will organize that setup for you. So if you need a demo account setting up, you've got questions about setting a live account up, just contact Nathan. His details are there in the chat. All right, let's get into tonight's webinar. So first, let's look at the news. Let me just refresh. Now, we had the FOMC statement early morning. Nothing changed early morning, but I think the general tone was that we could have a further rate rise, and the general tone was we could be seeing rates at a high level for a longish period of time, which was kind of hawkish, and the US dollar certainly went up. Okay. Now, other thing to note, yesterday we had the UK CPI, which came in lower. So we do have an interest rate decision from the UK tonight, 9 p.m. There's a possibility that this could have a, well, forecasting a rate rise, but maybe they want to put the brakes on. Or maybe they'll rise, but then the commentary from the Bank of England may be dovish. So we'll have to wait and see. So be aware, pound cross is going to be very dangerous trading at the moment because of that item at 9 p.m. Unemployment claims from the US at 10:30 p.m. Recently had an actual no rate rise, actually. You can see here, we're expecting a rate rise from the Swiss National Bank, but it came in as it came in last month. Didn't actually put a rate rise in there. All right. But I did note the dollar franc, I think, went up nonetheless. Sorry, the dollar franc went up. So it was negative for the franc side because, of course, they're probably expecting a rate rise there. So that would be negative for the franc, positive for the US dollar in that equation. All right, big one tomorrow. So yen cross is very dangerous to trade at the moment because we have the Bank of Japan monetary policy statement coming out tomorrow. So be aware of that. It's usually at 1:30 in the afternoon, but it's around that time. Never give a date on here. All right, you can go to Forex Factory and just review all those news items for the rest of the week, but those are the ones that you should be considering right now. So let's get into the charts. So we'll start with the dollar index. All right, so through the week, we're getting support pretty much just ahead of 104.66, the weekly level we broke above, the weekly chart. Now this is the 2, 4, 6, 8. This is the 10th positive week. So the key level to watch over the next week or two will be how the market reacts to 105.87. This is a monthly high point to the monthly chart. There it is. Now, is this a low for the year? And are we moving up to try and challenge the high of last year over the next, what do we have left? 3 months of the year. All right, so very bullish is the US dollar at the moment. S&P 500. It's forming a lower top here on the weekly chart. We're going to be forming a lower bottom. So I think we're getting a change in trend up here at the 79% level of the large range. And the day charts, as I said, Tuesday, breaking this minor low, breaking this major low on the day chart here has certainly put this into a downtrend. Looking for a rally at the moment. If you want to trade this pay, now that we've moved down, you'd be hopefully looking for some form of rally, maybe back to the 62%, if it can offer that. 44.65 overlaps with daily resistance to the left here. That would be a great level to watch if we can rally back. But in any form, however you trade in the S&P 500, it's in the downtrend now on the daily. And we are down 2, 4, 5 days. So we're probably due a rally. I would wait for 1 or 2 days up. Then can we have a day down forming on the lower top? All right, so that's what I've been looking for. All right, let's get into, we will start with the euro dollar. Now, on Tuesday, left my charts for my webinar charts as it is in the most part, just so that we can see what I was saying on Tuesday, did it come to fruition through the week? That's not because I want to shout out and say that I'm right, but just to show you that the technical analysis components that I employ do work quite well, very well at times. So what I was discussing on Tuesday was this could hold at 106.86 or come up within the range of last week. We did a webinar on this 2 weeks ago. Just came up fraction short of 79%. I said it could fill this imbalance this week, and then we've moved down following the FMC. So really that's a 79% retracement of last week's range moving down. Now that we've moved down, there's a possibility, I think, here of a bounce. We're bouncing on support there, 106.35 still. 106.35 is actually a monthly area of support from the monthly chart here. Right, so the monthly level's over here, but there is a minor monthly swing point there, which is a weekly swing point. So 106.35, we're having some form of support coming in there, in that it doesn't want to just commit down, but we are definitely in a downtrend here. So at the moment, again, we're overrun to the downside here at the moment. So I will just be simply monitoring. Potentially this is the high of the week. All right, and potentially this could be the low of the week. So that's the range I would be monitoring now for price action to come up. Now back to the 62% level of that range, pretty much overlaps with your daily support level at 106.86. That would be where I would be looking for price to rally back to, and then can it hold and fail there for another move down. All right, so I'm not going to have the fear of missing out and get caught at the bottom. Could come up to the 107 level, so we just drop down to a lower time frame. $15-minute chart. So I would be looking up here at the 62-day support area. That's today's projected high as well. So 106.90, 106.86. And as well, I would also focus on the 107 level. So I don't mind if it moves up to 107. It could come up through into that area and then drop. So I want to see a failure in that area, rally back to, and then a move back down. Looking for your setup to sell up here. Euro yen. Now this is how my fib drawn on Tuesday. I said it could hold at the weekly resistance level, 157.98, or come up to the 79% level, come up a little bit higher. So it is rather range bound here. It's kind of operating just double checking. There's daily resistance here. It's kind of operating in a range. Top of the range is here. And the bottom of the range, let's day support there. A couple of false breaks. All right. Now it could have failed up here, and then you're simply watching this smaller range for a rally up and then a fall down. So I'm going to get rid of that fib so we can just draw a smaller fib. Now we actually have already rejected the weekly resistance level. Back to day chart, that's this area over here. So we could actually hold here and then trade down. My preferred option would always be the 79% level, just because it's a higher level and offers better risk reward. And we've been above and below that weekly level. So I don't know how valid it is. I've just got it on there because I know where it is. But a lot more range bound than holding at this level in general terms. So we've been above, below, above, we've been back below. So I would look up here at the 79% level, really, if you want to trade this pair. Don't forget, we've got the Bank of Japan monetary policy statement, so it's a bit difficult holding a position into that. But tomorrow, you know, if we come up to 158.51 after the Audjpy decision and then start to reject, we could be flying at the top of the range to move back down to the bottom of the range. So I will be watching for that too. So at the moment, if we drop down to 50-minute chart, this big positive candle right now is kind of looking like we're moving higher at the moment. I don't think we're flying at 62 unless it starts to put its brakes on. We could well be coming up to the higher level. So, you know, what she's set up to sell, you could be monitoring for a failure here at the 62 level or the 79% level. All right, that's what I'll be watching for. Euro pound, heading strongly north as I'm talking. So is the pound dollar moving down, or is the euro dollar moving up? And the euro pound's been moving up as the pound dollar has been heavily selling off. So it's coming up. And if we trade above this high, we've got probably a change in trend here. So that's the area that I've been watching. It had a nice rejection down from this area yesterday, but it's continuing up today. I'll just be watching at the moment to see what it does in this area. We can see we held, false broke, held, bit of a false break here. This is where the sellers have been over the last 2.5 months. So I'll just be watching to see what price does on the close today. Do we reject? If we do, then you want to start to look to a lower time frame for a reversal back down. All right. It's all going to depend what the pound does today and its interest rate decision. If the pound keeps dropping to the US dollar, this is probably going to keep moving up. So I'll just be waiting to see what the close does today. You could, though, if you want to get down to a lower time frame, is simply look at this area on the lower time frame. So the resistance level is from 86.58 to 86.68. If you start to see a reversal in this area, and today's projected highs up there too, that's the area to watch for reversal if you want to drop down to a lower time frame today and start to look for a reversal. All right, getting into the pound. Pound on, let's go up to the 1 hour chart. I was looking at this area on Tuesday, saying around about the 124 area. The failure did go up through a little bit more, but you can see through the course of the week, this area has been where the market has been struggling at 124. And of course, then we've moved down from that area. Now, today chart. It's trying to break below this weekly support area, 123.08. It's going to, you know, this could be a very strong level of support. On Tuesday, I showed you, the monthly range is here. That's the monthly chart. When you drop to the weekly chart, you've got weekly support at the 62 level. 123.14 down to 123.08 is your weekly support level. Trying to trade below that at the moment, but just because it trades below does not mean we're going below. Stops are going off to, long positions are getting closed. What do we see by the end of the day? We see a significant reversal here to the upside. This could be a bottom area for a long-term reversal. It's a very good level of support. We're just going to have to wait and see what price does. Now, if we get a minor rally, I would look for a minor rally. We bounce from 2300 to 2308 here. If we're only going to have a minor rally, that would be the level to watch. 123.68, this area here, to be resistance for then a move down. You can see what's been happening through the course of this decline. Decline, rally. We actually declined there. Intraday, we came back up that day. Broken support becomes resistance and then further declined. So broken support being resistance on this pair at the moment is working great. So that's what I'll be looking for at the moment. You know, I'm not going to sell into supports. If I start to see a major reversal, I could start to look to the long side, but I would just look to sell a rally if one can come around at the moment until unless we see a major reversal on the cards. Don't forget the US dollar is getting very strong. So that's what I'll be looking for. Let's just drop it down to the 15-minute. Well, the 4-hour, you can see it's just in the downtrend. Drag a fib across the range. That's the top bottom at the moment. And we can see the 62 levels in the area of that level of broken support that I was discussing at 123.68. 62 levels at 123.72. Look on the lower time frame. The clear area, if we don't move down any further before rallying, would be 123.68 up to 123.72. That's the level I would watch. All right. I'm not going to sell at the bottom of that move. We could still have another day down, but I'm not going to sell at the bottom of the move. I'll always look for a rally. All right. Be aware of the interest rate decision at 9 o'clock. Pound yen. It's just holding to a downtrend. Of course, we've got the bodge tomorrow. The weekly trend, though, is quite clearly up. It has been up all year. So it is difficult to think about getting to the short side for too long because we may just come down to, say, to the 62% level. 180.29 is that level. And just above it, we've got what is actually monthly support at 180.41. So that would be a great level to watch. This area down here, it became support here as well. So at the moment, if you're prepared to get to the short side, I would look for the same mode of operation as in the pound dollar. Allow this to move below this little area of support and look for a rally back to. All right, it is rather choppy here, so it's not my preferred option. I would need to see this move further down first. So, you know, I'd need to be able to draw a fib across that range to a low point where then where the 62% level or the 79% level overlap with that area. The fact that it hasn't moved too much through, in my mind, means we could actually just false break the area and move back up. So I'd need a situation where we can move down to that level. Move down to around about here. Can we then trade back up to broken support and have enough fib overlap? Lots of 4-hour support in here too being broken. So can price do that sort of thing? We got back down to 180.41 at some point over the next week. That could be a very good area for a reversal back up. Okay. All right, Aussie yen. Now it has moved higher than I was expecting. I was maybe expecting this to hold at this area here at the start of the week because Friday rejected it, but we've moved up to the known level of weekly resistance. Strong level that's been operating on the weekly chart. All this area to the left. This high point here, 95.73. We could be forming some form of double top here for a reversal back down the range. And I've been discussing, you know, when a month or two ago, I was discussing the possibility of a head and shoulder pattern forming here. So now we could be having a weekly double top pattern forming to continue the play of that head and shoulder pattern moving down the range, potentially. That's what I'm looking at. So there's the weekly double top. You can see we're having, there's a candlestick pattern here, if I could remember what it's called. I think it's called a, it's going to annoy me now, I can't remember it. It's called a evening star. Usually you have more of a spinning top at the top, but it's usually a large candle, spinning top, and then a large candle down. So we kind of got that scenario going at the moment. In any event, we're clearly selling off from this level. And if I'm dealing with a double top, so the area of my double top at the moment is that's my pattern. It's gone through a bit, but that's fine. Is then I like to be getting in by the 79. So I draw my fib across the range. I like to be getting in by the 79% level because the target's down here at the 200 level. By getting in at the 79% level, stop above the top, I think it's going to give you a risk reward of about, I don't know, 1.7, something like that, depending on how you construct it. If we do get down to there, it's round about 1 to 7, maybe a fraction less, but still a good risk reward, even if it's a fraction less. Now you could be dropping down to a lower time frame to start to monitor. Now what might happen today is this movement down today is starting to move below these highs that we moved above through the week. So over the next 2 or 3 trading days, so this high here, 95.05, could become resistance around about the 95 level to trade down from, okay? So your options could be, I'm just going to put my fib back in. You could see whether the price can just cycle back up to 95.19. If you can, put your stop above the high, looking to trade down towards the 200 level. Or start to watch for a breakdown. Now, a number of things can happen here. This is quite overstretched at the moment. So in all probability, unless we just keep selling off, we may see a rally. We could see a head and shoulder pattern form if we rally back up. So it's worth watching for that to occur. So looking for an entry up here at 95.62. That's the 62% retracement on opposite the left shoulder. Getting yourself ready, stop above the high point in the head for that double top to run down to its fruition if that's what it wants to do. So if you were constructing like this, you'd have much better risk reward than 1 to 7. All right, so I would actually be waiting to see if the price could do that, or even get up to the 79% level. That would see another retest of the weekly resistance level. All right, but the logical thing is there could be a pattern forming there if we rally back up. All right. Aussie dollar. I can get rid of my coin tool. It's rather range bound, but you know, 2 key levels I had drawn in on my chart. Monthly resistance at 64.58. You can see we've rejected that through the week. Rejected it Tuesday, traded above Wednesday, but clearly rejected it as it tagged up here, trying to test the 65 level, holding at 64.96 here. Now it's rather range bound. We may only move back down to the bottom of the range here at the moment, or we may break, but it is rather range bound. So I wouldn't, because it's been range bound, I wouldn't get too, you know, if you are short, I wouldn't get too aggressive to the downside at the moment because we could hold at the bottom. So clearly you know, we've got some form of range here. So not seeing anything to do at the moment because we're getting past the midpoint of the range. I drew my fib in across that range. We're beyond the center already, so it's too late to get in to get to the bottom here. What could happen is we could simply see another rally back up to retest resistance, hold to trade down. All right, that's what I'll be watching for. I wouldn't be trying to sell it at the bottom of today. I would look for a rally. And a good level to watch would be 64.58 monthly resistance that we've generally been consolidating below, but we just keep drifting above. Not on any good news, we're getting above, and then when bad news comes, it just wants to drop straight back below. So if you can get a tight entry set up at 64.58 area, that would be ideal. Right, New Zealand yen. So this is how I drew it in on Tuesday. And lo and behold, the weekly resistance level, in fact, weekly and monthly resistance over here. That's a monthly top that we've been finding out over the last couple of months. Tying up with the 79% level. I was discussing a little bit of an imbalance in here, still needed to get filled. Possibility of a left shoulder, head, right shoulder. Yes, it's traded through that 79. The 79 lined up with the head, with the left shoulder. If you sold at the 79, stop above the high, we don't know whether that's going to run out to a very profitable trade at the moment, but you are in profit. All right, so there's the possibility that we are seeing left shoulder. Kind of a right shoulder here. And we could be seeing, you know, target would be down here. 127 extension and support at 85.20 in the medium term. All right, that's what I'll be watching for. Now, price action may come back up and do a retest, so you can get a tighter entry if you're not already in at the moment. Then you could be dropping down to a lower time frame. Like I was showing it on the Aussie yen, 79% level overlaps with your resistance, so that's your level up there. 88.14 to 88.16 would be the great area to watch if we rally back up now. All right, don't forget we've got the bodge tomorrow, so I mean we might not get up there today, but the bodge may drive it up there tomorrow. And then if it fails up there, you can get yourself set for that head and shoulder pattern. All right, New Zealand dollar, this is how it's set up on Tuesday. That was the area I was saying to watch. Broken monthly support over here. It's been resistance through here. There's an imbalance in there that needed to be filled. Oh, I'm pretty sure that's on the 4-hour chart. There we are. There's the imbalance that needed to be filled. Came up to fill the imbalance. And down she goes. Now, I would take the same tactic as I just showed you on the New Zealand yen. If you want to get short, we could anticipate a rally. Could get a little head and shoulder pattern here. Left shoulder, head, right shoulder. All right, you can look for that, or simply look for a rally back up to the 79% level. There's a bit of an imbalance in there that needs to be filled on a lower time frame. So that's what I'll be watching for there on the New Zealand dollar. Wouldn't be trying to sell anywhere near the bottom here. Now we've traded back down to some support levels here. All right, but I'll be looking to sell a rally. I always prefer the 79% level. It offers you a better risk reward. So I'll just leave that like that. We'll have a look how that pans out. Dollar CAD. Now, from the monthly perspective, that's the range that I've got drawn in here. We have failed at the 79% level and at weekly highs. The weekly chart, there's your weekly highs. So have we failed up there? That's the big question. We've actually traded down to, we're failing at weekly resistance through here. 136.54 is the first level. We've traded down to weekly support at 133.86, and maybe support's coming in now to move back up to test that area and move above. So, we're definitely getting US dollar strength. It's tricky. The day chart trend, though, is down. So I would be treating this at the moment and get rid of the, if I was going to be a trader, I would want to see a high rally. So these old support levels, they could be resistance, but if I wanted to really trade this pair, I'd want to see a high rally. There's the daily downward move. See this area up here. That would present a nice potential head and shoulder pattern if we could rally. 79% levels at 136.26. So can we put our right shoulder in here? Move up. Trade down. All right, now I know there's a lot of space to trade up with there. If you want to get to the long side, you could look to a lower time frame. And Azuhi's looking for the same thing. As well, if you monitor the dollar index, because if the dollar index can't move above that monthly top, but let's say the dollar index trades up to its monthly top and fails, well, this is going to help the dollar CAD trade up to that area. And if you see the dollar index then failing at the monthly top, this could then turn over to the downside. So that's what I would be looking for as a really nice pattern that could come together there on the dollar CAD. So watching that to come up into that area there. 79% levels at 136.26. Right, dollar franc, it's actually coming up to the area that I've highlighted. It's actually the 62% level, or just short of the monthly swing range here. And there's also monthly resistance at 90.84. Now we do have very strong US dollar. Doesn't mean to say price is going to stop there. It could just move up and through, but it's worth understanding where the high time frame trend is. It's actually down, and this is just corrective move back up. The weekly trend is still remaining down until it takes out this high. And we've got these lows in here too, but the primary level of resistance is the monthly level at 90.84. And we're just a fraction short at the moment. So clearly watching over the next couple of days is to see what price action does in this area. 90.84 is the area to watch, up to 9100. Got these tops here too. That's where it held last time. It could hold in the same area and then turn around. All right, we'll have to wait and see. We didn't get a interest rate hike today from Swiss bank, so that does make dollar franc more positive to the upside because the US dollar has got a higher interest rate differential and the franc's not catching up today, not narrowing the gap on the interest rate differential. So it does add fuel to the fire for the dollar franc to go up. But if we do start to see this hold here, we could see then a turnaround for maybe a long-term move back down the range. So I could actually, on this pair right now, don't really need these other lines in. Key area to watch is just there. 90.84. All right, dollar yen. Now we actually have moved above the level I've been discussing, the monthly historical level from 1998 Right, zoom it out. This high over here. At the moment, we are above it. We're getting very much into the area where we turned around from last year. There's another area a little bit higher up. 149.07. What's that high? 149.07. This must be a day chart level. All right. So we're definitely in an uptrend. I know I saw some remarks somewhere on Forex Factory today, somewhere in the news. From Japan here, Japan Matsuno. Important that FX moves stability reflecting fundamentals. So we often get these comments from the Bank of Japan people when prices are getting too high. We have their policy statement tomorrow, so it'd be very dangerous to be long at the moment up there into that event. I'm not saying you should be short. I think you should be on the sidelines. And understanding that we are at very high levels, trying to move above that 147.68 high from back in time. All right, and this is holding to an uptrend on the day chart. 148.84, where am I getting that level from? All right, so day chart top over here. Right, so at the moment, I'm just monitoring this pair, waiting to see what the Audjpy does. Do we get any signal that they want to come in and change policy or intervene? All right, we've been getting good support down around about 145 or just underneath this area here. So we could say a pullback to this area and this area hold to continue up. We're not expecting any policy change where we might get some intervention though. So intervention could, when we get intervention, we can get 500 pip moves. So 500 pip moves from where we are at the moment could get down to 143, or at least see a massive rejection down here on support to trade back up. So I'll just be on the sidelines and waiting to see what comes tomorrow afternoon. All right, let's get into the gold. That's where I highlighted where to sell because it was mixed on gold. We've got a lower top, higher bottom forming at the moment, I think, from memory on the daily. So I just drew a fib across the range and highlight the top of the area at the moment. So it's still in the middle of the range, kind of. So today charts, in fact, it was a weekly chart. We have a lower top and a possible higher bottom. Which way is it going to go? Be easy to trade it if we had a clearer direction from the weekly perspective. The day perspective is, you could say the day perspective is up because it moved to a higher top. So if you wanted to take that tack, you could draw a fib across that move up and look for a pullback. 62 level does sit on top of this support line. That support line's from the weekly chart. That high over here that the market's been referencing to. So, and there's day support there as well. So that area, 1916, 1918 area there. That's the support area pretty much. If you want to look for a trade up to the long side, that potentially there could be some form of left shoulder, inverted head. Right shoulder scenario. If you like trading gold, then that may pull back to there and hold. All right. All right, so you can monitor that. All right, let's just see what the pound's doing. Well, it's continuing to move down at the moment. Euro dollar is rallying. So the euro pound is going to be continuing its move up too. It's now hitting that weekly high there. So theoretically, it's changing the trend to up, but just because it's trading above a weekly high point, we could get a complete failure there. All right. So we're testing the upper area at the moment. Euro yen, while I've been talking, once, twice, 3 times now, it's holding at the 62% level and the central pivot point. So that's definitely starting to become a very strong area of intraday resistance. That could be the high area of the day. We're back below the 158 level. All right, so any questions? I'll just hang around for 5 minutes. I suppose just having a look what news is coming out next week as we get into the last week of the month. So let's have a look at next week. Right, and let's just finish off this week into tomorrow's trading. Once we get past the UK interest rate decision this evening and the US unemployment claims, tomorrow evening we have getting into tomorrow evening pound retail sales. And then we got the Eurozone, the UK, and the US flash manufacturing and flash service PMI data is coming out. Lots of data coming out there in tomorrow evening, okay? Azur, you're asking me, why is the euro dollar rallying, pound dollar is falling, and gold too? Well, the pound dollar is falling probably because people are expecting a dovish statement from the Bank of England. Euro dollar is just covering some of it short, so I'm guessing from yesterday's selling. Gold, I would assume, is falling because pairs to the US dollar generally are trending down. And then when the pairs are heavily selling to the US dollar off, gold tends to follow. So the thing that's out of equation there is the euro dollar. It's just moving back up a bit. But don't forget the euro dollar. It's in a downtrend. This is just intraday moving up. It's not having a day up. It's intraday up at the moment. All right. It's just looking for a rally point before it moves down. All right. We're not having like a day, 2 or 3 days up while the pound's moving down and gold's moving down. It's just intraday movement. All right. So back to the news. So that's what's going Friday. So then we'll just have a look at next week. All right, so next week for the Aussie pair, Wednesday, we have inflation figures. It's not 4.9% previous, so it's not telling us the forecast yet. So a bit early to have a look at what the forecasts are, not coming on here at the moment, but it's always worth knowing what's coming out next week. We've got the Euro German prelim CPI, Spanish flash CPI, final GDP QQ for the US. I did notice on the statement from the Federal Reserve yesterday that I think they may be looking at the GDP figures when they're assessing interest rates, and they are potentially expecting GDP to move up. So that's why they're maybe a little bit hawkish. Powell speaks on Friday, 6 a.m. in the morning. Chinese manufacturing PMI will reflect the Aussie, New Zealand crosses, Canadian GDP, US core PC price index, and then the consumer sentiment into Saturday. So not a massive week next week. The market will probably look into the GDP figures there from the US for sure. And the Aussie crosses at home here. What is the inflation figure going to come out at? All right. Thank you, Steve, for your comments there. All right, so any final questions before we wrap up for the week? Of course, after the FMC statement yesterday, markets have dropped. Here we have it on the Eurodollar, it's dropped. We often then maybe get a bit of a fall through, but then we're probably going to reclaim some of that drop before hopefully then it turns over and you can look for an opportunity to sell. Slav, you're asking me, if the budget decides to intervene, shorting euro yen could be a good trade. Yeah, well, I mean, that euro yen's setting up quite nicely here, but the question is, what does the budge do? You know, are you short and the budge doesn't do anything and then it goes up? That's, you know, you're of course shorting it there, and if it's moved down nicely ahead of the budge, that would be great. But you know, I guess there's a very high probability. You know, I would just have to say there's generally a high probability at price levels that where we're at on the dollar yen. There is a high probability that we may see some intervention, but do you want to take the risk? So yeah, I mean, as you say, euro yen may be positioned to move down, especially if the euro dollar is going to continue a move down too. So it just depends if you want to take the risk. Yeah, if we get intervention, it's definitely going to fall because they never intervene the opposite way, do they? They don't want to push the price even further against the yen. So that's the biggest risk item at the moment is, you know, once we get past the pound interest rate decision is the budge tomorrow. Once we get past that, over the next week, as we just went through the news items there, there's not too much risk around. So hopefully the trends prevail and we see some nice rallies, see some nice patterns forming intraday that you can, you know, if I didn't have to worry about the budge, this looks like a sell right now, doesn't it really? It's not wanting to move up and beyond the central pivot here on the euro yen. All right, so I'll leave you with that final picture there of the euro yen. Everybody have a great weekend. Thank you very much for your company as always. I look forward to seeing you next week. Thanks, everybody.